What are macros? Macros in smart money concept is basically a sub-concept which is framed around a 20-minute cycle. It's practically from the last 10 minutes of every hour to the first 10 minutes of the next hour. As an ISMC or IST trader, you would expect price to spool towards a predetermined target in form of liquidity during a macro. Objectives of macro are basically liquidity. So I would expect price to run after a certain level of liquidity, which is in line with my higher time frame bars during a macro. So with the help of the macro, you can partake in on an ongoing trend market maker model and still have a good risk to reward ratio. So now enough of that, let's go into the chart. Alright, so now we are going to take this portion of price action as an example, and I'll show you clearly how to utilize the macros and engaging on a trade live. So currently we can see we had a pullback here, a retracement downwards, and basically we went after this pool of sell side liquidity down there, took out the sell side liquidity, tagging that as this. I think I have templates stored already on that. So sell side liquidity, we took out that sell side and we are rejecting off right here, rejecting off here on a 1 minute buy side, 1 minute BC fair value gap, and we're rejecting that point. We had a displacement closing above this high, making this an order block for us, bullish order block. Now we are looking towards opposing liquidity angles, looking towards opposing liquidity angles. We have the buy side liquidity right here. Also have buy side here. Have two buy side liquidity. Yeah, you can tag the first one as the minor buy side liquidity, and the second as the major one, whichever annotations you choose to use for on your chart. So clearly, what we are looking forward is we are trying to catch on this underlying trend. Currently, we are bullish. Take note, we are bullish already, and we have our time frame buyers. They are bullish, pushing upwards, and we're trying to engage on this trend regardless of not being able to get this move at the bottom. So right here, we see the liquidity sweep right here. All we're going to do after the break of structure, we're going to wait at the next macro, that 20 minutes portion of price action. That's what we're going to wait to look for our entry. And the next macro right here, it's the 550. So the 610 to 610, yes. That was the macro. We're interested in 550 to 610. You can say it's a 20 minutes time interval from 550 to 610. Like I said, the last 10 minutes, we start from 550 till 6. So the first 10 minutes, we start from 6 to 610. You understand? That's the macro cycle. So we have price running downwards into this fair value gap right here. We have a fair value gap right here. A BC also. Price runs down into that fair value gap right there. You're reacting also as well to this order block right here, and engaging this trade. You've taken an entry from the main threshold of that fair value gap, which is the midpoint of that fair value gap right there. Stops would be below this bearish candle right here, just below there, while we are taking majors of basically 3 PDRAs below our entry. If probably you use the, let's just say we use the high for an entry, use the high of that kind of an entry. We are placing our stops 3 PDRAs below, and 3 PDRAs below is just this BC right here. We have this inverse fair value gap right here. We have this inverse fair value gap right here. I'm going to take those stuff out, and we also have the main threshold of this other block. Main threshold of the other block, which is the midpoint right here, and we're just going to place our stop loss below that. And I think this low is the best, so that's where our stop loss is going to be. And our target is relatively going to be the opposing liquidity buy side. You can see first target can be this high, second target can be this high. That's a trade giving you a 1:2.6 using the macros. You can see expecting price to spool towards an opposing liquidity, not just an opposing liquidity, but you're expecting price to move towards your higher time frame bias. You can see higher time frame, we have, I think there's a higher time frame bias already. We are currently bullish. Price is pushing upwards. We are going to use the macro to take a continuation of that trend. You're not trying to pick the bottoms or the tops. No, you can use the macro. Like I said, one of the benefits of using the macro to trade is you get an opportunity to take part on an ongoing trend. You don't need to take the bottom right here. This is just the retracement, and you're able to cut the retracement, take it back to the side using the macro. So that's basically it. Going to look for another example. All right, for the next example, we'll be using a market maker sell model scenario to see how we can use the macro to engage in on a trade towards our terminals, our target, or our predetermined target. That's the whole idea. We need to have that in play already. So for this case, this is our predetermined target. This consolidation right here, low resistance liquidity run, our drawn liquidity. We see price running upwards. Right here, we took out this high during London, This is all during London. We took out this high during London, took out buy side. And towards the close of London section, we see price running above this low resistance liquidity run, sweeping that out during the time I called the London launch. That's what I refer to it as, from 6 to 7. That 1 hour span is what I refer personally to, the London launch. I don't know what else others may refer it to, but that's personally how I prefer calling it. So the London launch is ranges from 6 p.m. 6 a.m. From 6 a.m. 7 a.m. Basically, this time price goes after what's called liquidity. Seeks liquidity. If you very well know what price is heading to, you would wait and trade in that direction. So now we have more focused. We're not talking about the London launch right here. We're more focused on the macro. So see price take out buy side liquidity right here. Our drawn on liquidity is this sell side liquidity down here. All we need to do is wait for the macro and look for a spool displacement in the direction of the sell side liquidity. Now we have the macro present here was the 550 to the 610 macro. Like I said, the last 10 minutes to the first 10 minutes every hour. That's our macro. So we have that. I'm just going to liberate. So we have it from 5:50 a.m. 6:50. So 6:10 a.m. That's the macro. And this particular macro is what I refer to as the London launch macro. That's the 5:50 a.m. to 6:10 a.m. all New York local time. I would want to see price run after its level of liquidity. Right here, we have this as our objective. So currently, you can see price displace broke. So we had total soup right here, displace, making this another block. We had a displacement right here, but most times I don't really prefer taking trades off these market structure shifts that are not really convincing. You can see. So what I'll do, I'll just wait and watch. I would want it to be more clearer. So after that, I would see this displacement right here. That displacement is more of a confirmation. Okay, yeah, we are definitely displacing and going after sell side liquidity. So this personality, this with my entry, taking an entry there, stop loss just above this high. I would want to see this out as a breaker. So while stop loss right above here, we have 3 PDRs above my entry. So we have this fair value gap, and this other block right here. So that's 3 PDRs ahead of me. If price is going to go against me, and my stop loss is just above there. My target is the sell side liquidity. This relatively equal lows right there. This is my stops right there. That's a trade using the macros for a market maker sell model. You can basically use this for whatever form of model you're trading. The macros are very nice instruments to add on for trading because it gives you a more precise, cleaner entry. To me, that's how I see it. It gives a more cleaner entry when trading. So this is basically how to use as a beginner to use the macros. Make sure to give a thumbs up on this video, and if you do find the content valuable, subscribe to the channel for more videos like this. Also drop a comment on the comment section down below telling me what you would want me to talk about in my comment videos. Have a nice day.